Welcome back. It's time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. We're back with Greg Taylor. He's Chief Investment Officer at Purpose Investments to talk about gold, Greg, an asset that's disappointed investors for a good couple of years now. But you think that it may be wrong to give up entirely on gold.
Yeah, I don't think you want to give up fully on gold. It's certainly been one of the most frustrating assets as we've had for North American investors. And the adage has been that gold normally is a commodity that works in periods of excess or periods of duress. And we're getting both of those right now. And gold hasn't really been the asset that everyone's been hoping for. We got a brief glimmer of positive performance in 2020. But in the last few years, it's really been disappointing. And the big reason for that's all about the U.S. dollar. The U.S. dollar has had a massive run as a safe haven asset. And that's really muted the price performance of gold when you're sitting here in Canada and the US and looking at the commodity that's priced in US dollars. Because when you're sitting in other parts of the world, if you're in Europe or England or Japan, gold's been a really good asset class. And in those dollar terms, it's actually outperformed. So North American investors have been frustrated by gold and starting to question why it's in their portfolio. It's certainly not the worst investment when you look at tech stocks that some are down 60, 80, 80%, but it hasn't really done what everyone hoped it would. But I think it's still too soon to give up on the commodity yet, because if we do get a peak in this US dollar, and people are going to be rushing back to say, well, maybe I buy the tech stocks over a rebound, but don't forget about gold in that basket and buy list. If we do see the peak in the US dollar and a peak in yields, gold might be the asset class that goes on the run the longest and had the most stability behind it, because it really is an asset class that it has been underinvested in. There's not a lot of momentum in it, but these companies are still doing quite well, and the commodity definitely has a place in investors' portfolios.
What would bring about that peak in the U.S. dollar? It's got to be some dovish signals from the Fed.
Absolutely. It's all going to be about interest rates. And we keep coming back to yields and what the terminal rate for bond markets is going to be. But we're getting closer to that point. We certainly had been some built up case. And that's where the disappointment's been the last few months, is people had been hoping that we get this peak inflation in August and maybe this month. But really, if it happens in the next month or two, it's really okay, because what that means is we're in the late innings of the rally for the US dollar and for bond yields. And when they start to peak, that could be enough for gold to start going again. Gold has been frustrating, but if the US dollar breaks down, it could be the asset class that does the best.
Very quickly, what about other commodities? All commodity, or very nearly all commodities, are priced in US dollars. What about oil and copper?
Well, certainly they're almost the same case, that price in US dollars. If the US dollar starts to break down, the price will go higher. But when you look at commodities across the board, the last few years, there's really been a lack of supply coming on. There's not a lot of new mines being built for copper. There's not a lot of new wells being drilled, and not a lot of new oil sands projects coming on. So there's not a lot of supply that's come on in any of these commodities. And that's setting us up that once the world does start to come out of this recession, once demand really starts to pick up, there's not a lot of supply that can come on quickly. So there's no mines that can be built in the next year or two. These projects take 5 to 10 years to be built. And that's setting up that commodities could be in a sweet spot and go for a decent run. So good for the TSX and could be good for the commodity portfolio.
Okay.